Rupee is depreciating against the dollar. FIIs are exiting the Indian stock market. Day by day, stock market is going down. In such a situation, what should be the retail investors' investment strategy? This is a question recently asked by one of my blog reader, and let me try to answer to this question in this video. Hi, I am BasuNivesh from BasuNivesh.com. See, if you look into all these three situations, like what I mentioned earlier, rupee's depreciation against the dollar, FIIs are pulling out from the Indian market, and day by day market downtrend. All these three things are not under our control as a retail investors. So what I'm trying to highlight as a first point is try to control the controllables. We can't control the rupee depreciation against the dollar as a retail investors. We can't control the FIIs movement. We can't control the market downtrend. So for that reason, I strongly suggest you to ignore all these news and noise. Then what should be our investment strategy? The second point what I want to highlight here is try to have a long-term view with respect to the equity market. If you have entered into the equity market with a mindset that, okay, in the short term I will create a huge wealth or else generate high returns, means it is not for you. You must have a long-term view in the sense more than 5 years. The second important aspect is have a proper asset allocation between equity and debt or else other asset classes, whatever you have included. Don't include the equity as a single asset class in your overall asset class. You have to diversify because we don't know how the market will work and we don't know which asset class will perform in the future. So for that reason, having a long-term view is of very much important, and diversifying your investment is of utmost important. The third important point what I want to highlight here is check your asset allocation. If it is intact, nothing to worry. If it is deviated from what you have defined, then do the rebalancing. These are the only three things you can do it. The first one is ignoring the noise, trying to control which are under our control, having a long-term view, and checking your asset allocation. If these three are intact, nothing to worry. Let the rupee depreciate against the dollar. Let the FIIs pull out from the market. Let the equity market goes down also. Nothing to worry. I think I have provided the clarity for all the retail investors. Thank you for watching this video.